Really, is there now visible and is the voice audible?
Sumit ji, your screen is still. I just started screen sharing. Sumit ji, now your system is working.
Ashwin ji or Preeti ji, is the screen visible and voice is okay?
Yes, I can see the screen and I can hear you.
So good afternoon, participants. After a lot of hiccups, okay, let's start the session. So I'm sure you all will be excited for doing this new course. And the beauty of this course is it is just started 2 years back. A lot of opportunities have come in and a lot more to come in future. Right now, ACT is just a baby, but in future years, I think I'm getting some echo. Just give me a minute.
I tried to switch on the network. I hope this will work now, at least for hearing purpose. So just give me a small intro. I've been born, brought up in Jaipur. I did my articleship in Jaipur, then moved to Delhi. I worked in Delhi for a few years. Then I worked to Middle East. Then I worked to Mumbai. I worked in Mumbai for a few years in PwC audit. And then I moved to Middle East. In Middle East, Bahrain, I worked mainly in audit and advisory and little bit on valuations, not too much, but very basics on valuation. And 3 years back, I moved back to Jaipur. Once you move into India after working abroad, especially in Middle East countries, you don't have any other opportunities in taxation, because taxation you are totally out. In terms of GST, it is out. So luckily the new fields which have come in India was valuations, IBC, and Ind AS. And these three fields are very new for every practitioner, whether you are having a 30-year-old practice or 5-year-old practice. Everybody has same level of opportunities. So this new field has started 2 years, 3 years back. As of now, only Companies Act, IBC, and little bit in SEBI gives us recognition. but at least the starting has done, and in future we expect a lot more to come. If we talk as of yesterday, we have approximately approved values on the IBVI portal 3,254, and on if you take individuals who are registered as SFA are 1191, land and building 1710, plant and machinery 353, and registered valued entities are 24. You should be aware with the concept that unlike your CA and CS on ICWA, where you are allowed to practice individually also and in a firm also, in IBC in valuations, it is not allowed. Here, either you can practice as an individual or you can practice as a part of either firm, LLP, or company structure. So around 2 years now, we are almost having only 24 entities and majority of people are working in individuals. Can you give any thought why there is number of entities are very less, whereas majority of people want to work into individual mode? Anyone has any clue on this or any thought process? Why the number looks so skewed that majority of the professionals are practicing an individual name? One is poor networking, fine. Second, what other things you can recall or you can think of which makes? Now, before we jump to this, let's understand, should in a long run, and we are talking in a long run of practice, in long run of practice, will individual practitioners will survive or will entity will survive? And when I say long run means 5-10 years later. Just to give you a background where I'm saying the long run and short run. Now, I'm sure we all would be are aware of IBC, at least basics of IBC everybody would be knowing. So in IBC, it is mandatory that whenever a company goes into liquidation or insolvency process, a IP has to appoint 2 valuers. Okay? So if IP has to appoint 2 valuers, does it mean 2 valuers for each asset class? That is total 6 valuers, or any 2 valuers would be fine? Based on your little bit understanding, what do you think? The number should be 2 or 6? If you are an IP of any company in insolvency, you need to appoint 2 only, any 2, or it has to be 6 numbers, hypothetically. So it has to be 6 numbers. So law is very clear. Now, if you are IP, would you like to appoint 6 different individuals, or would you prefer appointing 2 RVE entities, 2 registered value entities? Each entity will have 3 values. What would be your choice of preference? If you put yourself into the IP shoes, obviously any sensible IP would not like to indulge into appointment with 6 people, because in appointing 6 people, there will be too much of coordination point, too much of administration issues. So he will better prefer appoint 2 RVEs, and these 24 RVEs which are working in India currently, they have become now the preferred choice of all big IP valuers or big IP entities. Lot of IPE agencies have made a mandatory policy. Now we will give only work to RVEs. Now, if you got this background, then now you can think of, apart from the reasons Mr. Dhar has mentioned, why people are not focusing more on RVE, why they're preferring more on individual. Because if you see IP insolvency professional business, majority of the people are now working into IPE entities in insolvency. Any thought process? If you like to speak or if you like to chat, whatever ways you are comfortable, I'm fine. We'll just try to understand just this concept a bit, and then I will come back. If you'll be able to, anybody see, right or wrong, it does not matter. Here we don't have a negative marking. So give an answer as much as possible so that we can understand what are the views and why this is not happening. So one of the reasons this is not happening, and one of the main reasons this is not happening, your valuation rules 2017 says that If it's a firm, or entity, or a LLP or a company of a registered valued entity, and suppose there are 5 partners and 5 partners are all registered valued entities. So if one partner makes a mistake and he commits an error grossly under the Act of Companies Act or RV rules, then the rule says in that scenario, penalty may be casted upon all the partners jointly and severally. So this may happen. Considering this, the penalty may go jointly and severally. Majority of the people are scared to enter into partnership. There are another challenges in opening a partnership apart from this. One, if any CA who is a practicing CA, became a registered valuer, and he goes to make a partnership firm with plant and machinery and land and building, in that case, ICA council regulations does not allow, because it will be like sharing profits with non-professionals of your own fraternity. So if our guidelines do not allow a CA to have a partnership with CAs, ICWA, or vice versa, engineers and all. So that guideline stops. So if somebody is not holding COP, then he can easily make. The best way to make, if somebody wants to make an entity, then you make a private limited company, then become a non-executive director. That is allowed. The reason of mentioning these all, that you all will face these challenges where we become and people will say we only need RVE. So we need to be very clear. Once you practice, once you become registered valuer, if you find like-minded people, my personal advice would be form a RVE for a long run, because a lot of banks like SBI and a lot of MNCs in long run will only prefer RVEs. Now this is something to scare you, and this is just an eye opener. So exam, and I'm sure everybody objective here is 2 objectives, and we all are doing this course for 2 objectives. One to learn knowledge on how to do valuation or how to proceed in the valuation field. Second, after you get a knowledge, you should also pass, and these 2 things both goes hand in hand. So if I get a lot of knowledge and I do not pass the exam, I will not be able to get the fruits out of the hard work which you are doing in 8 days of training, 7 days of training. And if you pass but do not have any knowledge, then you will not be able to deliver to the satisfaction of the client, and then you will have a meager practice. To get a best practice, we need to have knowledge and we need to pass the exam both. And this is a 100 marks MCQ, we all are aware. But see the passing percentages. If you see the passing percentages, this is data published by IBBI every quarterly on their website. If you see the passing percentages, how many number of people have attempted exam and how many have passed, so average comes up around 15%. Does that mean exam is very, very tough? My answer would be straight away, no, exam is not at all tough. Then a question you may ask is, in that scenario, why this result is so low like this? First of all, if you show this result to any CA student, he'll be more than happy. Because in CA finals and CAS and ICW finals, we used to have 2 to 3% passing percentage and less than in a single digit passing percentage. So here this passing percentage is in double digit. So we need to have a better side of the picture. Why the numbers are so low? Because in exam, we think that we will be focusing only on valuations, but the question will be asked so simple and so basics, and at times we goof up at basic questions. So if we goof up at basic questions, nobody can help us. Is how many of us are here in the class who are just new to valuation, have no knowledge of valuation or very basics on valuation? They are not experts, or because there are some people who will be experts who is working day in day out in valuations, but there are some people who have never touched valuation, never did any valuation engagements. Just we are doing this course first time because we heard from colleagues and friends. So we have only 1 no experience or 2 very few experience, not much. Okay. Due to valuation. So we have at least 4 members who are new to valuations. The rest I assume all are seasoned players and seasoned professionals who know valuation. Now, the hindsight is the people who are very new to valuations or who have very basic experience are they have the higher probability to clear the exam in first attempt than people who are hardcore professionals who are working only in valuations. Sounds a little bit bizarre statement that how I am saying that people who are experts in valuation are not able to clear in first attempt probability wise, and people who are very new to valuation are able to clear in first attempt or at the very early than people who are experienced. And it is not I'm not just telling this just to motivate you or just to pump you guys that do not worry and all. This is actually a fact, and why this is a fact we need to understand. Exam is fully MCQ based, fully law based. You will have certain topics like income tax, which even all chartered accountants may not find comfortable in income tax act. So if you're not practicing income tax in last 10-15 years, for you it will be tough. Basic questions will comes in Companies Act, basic questions. But if you are not into compliance, if you're not into Companies Act practice, you will find it tough. Simple question will come on economics, macroeconomics, very basics. But if you're not updated, you will find it very tough. The problem with the people who are expert is last 10, 15, 20 years, they're only working in one field. But if they are not aware on other fields, and that is the only reason people fail at 58, 59 and 59.75. I've seen majority of professionals failing between 58 and 59.75. That's the average benchmark where people fall around. But having said that, if we take care of basic concepts, like for example your valuation rules, in exam they will ask such a basic questions on valuation rules just from the standards. So to us it may look like we are doing a rectification. I need to read the line, it is written technical or professional, but these lines actually matters, and I will say these are low hanging fruits. And one thing is very sure, we all are sitting, our professionals who are sitting here, we are sitting at 50 marks bare minimum. So tomorrow if there is exam, and I can guarantee on this, without even studying, you just go and give exam. Don't attend any 8 days classes, just go and give exam tomorrow. If somebody goes and give exam, though practically you cannot do, but if somebody goes and gives exam, 50 marks is anyone can get. 50 marks is not a problem even without studying. Yes, the problem will come from 50 to 60, and the bridge is not easy. The bridge needs to be crossed, and we can cross the bridge. To cross the bridge, what you need to do is, for 50 hours of training, whatever the course contents are there, what are the faculties maybe sharing, you need to read, practice, and think from MCQ angles also. And you need to go to the basics also. If you go to the basics, nobody can stop you. And if you attend 8 days, 7 days sincerely, nobody can stop you. I'm sure, I'm not sure Vijayji did updated you or not. Recently, in two batches recently, members just passed the exam in 3 days time or 4th day time after finishing the course. And they are very young, 24, 25-year-old chartered accountant and very young professionals. So it's not that they're very experienced, but they just pass. And if we need a proof, so just few things I want to share. This CA, 64-year-old chartered accountant in Coimbatore, passed exam in first attempt. In his time, FM was not there at all. FM was not at all there. So if FM is not there still, his concept was very good on other laws. Very young company secretary, secured 75.5. So I passed in 2 attempts. First attempt I failed at 59.5 because I did not read rules strictly. I took rules very lightly. That costed me. The next time I secured 76 plus. Now what makes any faculty more happy? That one of your participant gets more than you. That makes more happy. But this thing is you need to focus and read very well. And the point I'm trying to emphasize, this participant cleared exam with 80 marks, but see what he's trying to say. But I must say, many questions were absurd. Besides studies, your general awareness and ability to guess also counts. So if you are clear on basic things, if you can make a good guesswork, and if you are aware of basic concepts, exam is fine. And why the questions are absurd? Because as a professional, we think, how can they ask such a silly questions? But they are asking such silly questions. So we need to be very careful. Let's take just take few questions, 2-3 questions before we deep dive. Quickly answer. You can answer in chat, you can speak, whatever makes comfortable to you. Question does not look that tough that we need to take that much time. Give any answer, what do you think? Right or wrong is immaterial here. We don't need to think about right and wrong. And here we should not test somebody else's knowledge, and we should not look how others is responding. We just need to give our best assessment, what we think. And those who are answering, they will get attendance for sure. So this becomes a proof. And those who are not answering does not get a. So I'm sure, this question I'm sure everybody would have gone through in your basics 12, 11, 12 BCom foundation where. So D cannot be the answer, we all are aware. D cannot be the answer, we all are aware, right? D cannot be the answer. Why? D cannot be answered because I'm sure every account has any of the natures. It can be personal, nominal, real. You remember whenever we were taught this basic concept, we were told 3 golden rules of accounting. 3 golden rules. Anybody can recall 3 golden rules? So whoever has answered A, maybe Preeti ji or maybe Ashwin ji or Amit ji, anybody who has answered A, can you let me know what are the 3 golden rules? Just, and again, I am not pinpointing anybody to check somebody's knowledge. I'm trying to understand basics, and the way I would like to interact is, there is one simple way. I'll tell you what is the answer. You will rectify the answer and try your luck in exam. But if the question changes in exam, so we don't want to have that kind of scenario. So conceptually, we like to build up from base. So anybody would like to just mention 3 golden rules? Debit what comes in, credit what goes out. Correct. Second.
Debit the
Then,
receiver, credit the giver.
Barabar. Correct. Third is one. What is the third one?
Debit all expenses and losses, and credit all gains and
credit
income.
all. Okay. This one is always related to, third rule which you mentioned is always related to nominal account. Agree? Yes, no, maybe. We all agree. The third rule is always related to nominal account. So debit the expenses, credit the income. So can this account be nominal? Answer is no. So share application cannot be nominal because neither it is expense nor income. D cannot be answered, A cannot be answered. Choice lies between B and C. Luckily, we all have given a correct answers. So it is a personal account. In exam, a lot of people either choose it as a nominal account or choose it as a real account, considering the fact that it may sound like a fictitious account, but it is actually a personal account. So we need to be very careful in exams, and before jumping to the answer, you need to think, and you have sufficient time. So no need to worry on time. Time you have enough in exam. But exams are such tricky and such simple, which make at times create a issue. Quickly answer this one. Nobody with equity. All will go with liability. So probably this is the batch which has given all correct answers. A lot of people go and take it as an equity because they think that we are talking as per old gap, IGAP. Now we need to understand the concept has changed. In Ind AS, we have redeemable preferential as a liability. So, but A lot of people say as per Companies Act it is equity. No, as per Companies Act also it will become liability, because if we assume we are following Ind AS. Somebody may query that how do I assume that question IBB is asking as per Ind AS or as per normal IGAP. So we need to have a basic assumption that the question will come as per Ind AS, because you have a separate Ind AS also in your syllabus for 5 marks. Question on economics. Quickly answer. We have already, it was a mistake was on my side. We have already spent, I wasted too much of time of yours. So if you can quickly respond, then I can help to make out. Anybody with answer D? Okay, so we got 2 people to answer. So Rohit Bajaj, your answer is also D, I assume. Okay, yeah, hard to sell in market, fine. Okay, now see, understand, whenever you talk to your forefathers, your parents or your grandfathers or your any seniors at your home, very elderly people who have seen generations, if you ask them, I want to make an investment, which commodity they will tell you to buy apart from land? What they will say, invest in this gold. And why they say invest in gold? For a reason. What is the reason? Why not they say, why they say highly liquid? So remember, we always say gold is like a hard cash. Hard cash means highly liquid. Even you go at 12 o'clock in the night, somebody can still buy your gold. It has a tangible value. So this question, when it comes in exam, कहाँ जाओगे आप अभी थोड़ी देर रुको ना. So this question may look very simple, but at times it confuses. So now understand, we are so many professionals sitting here, we also have 2 answers. So we also have a thought process. So it actually confuses. But the correct answer is option C. That is hard currency, means a currency which is highly liquid. So in exam, we need to no need to be sorry, please. It's just so it's in a theory lecture. We need to have some light moments to make it lively. But in exam, we need to be aware of basic concepts, so that we are not depriving of 1 marks. And when I say, when you do a 1 question 1 answer incorrect, people say it is loss of 0.25, I say it is a loss of 1.25. So it's a notional loss. 0.25 you will actually hit, and 1 marks which you are about to actually get it. And whenever you attempt any question, think how you all can link with it, because in exam they are asking very basics yet little bit confusing questions. Syllabus, I'm sure you all have been gone through, and if you have gone through the syllabus, and our first faculty, the most one of the most active faculties in valuations, and is taking too much sessions across pan India. 75-25 is probably the ratio. 75 you will get theory, 25 maximum you will get practical, or the range will go between 70-30 maximum. So even if you are not good at practicals, even if you are fundamentals, you are not good at computations, calculations, still you can become a registered valuer if your laws and theories are very strong. So if you are able to understand economics well, if you are able to understand financial statement analysis well, ethics reasonably well, general laws, Ind AS will not be having any technical questions. Ind AS will be just fundamental theory questions, valuation approaches, overview, then almost you're through. Even in your typical finance questions, question will come on theory. So they will not ask an exam to calculate Black and Scholes model. They will ask in theory in exam that what was the loophole of Black-Scholes model, or what Black-Scholes did not consider. That's why we had a new model. So theory needs to be very well thorough. So basics, I'm sure we all are, I'll rush to the basics. So that would have been covered in the morning session. That we have from 18th October 2017, we have a regulatory rules of valuation. IBBI is our regulator as of now. And we always say IBBI is a temporary regulator. Why we say the temporary regulator? Because there is a new act coming, which is in pipeline to come, where valuation will shift from IBBI to a new body, because now IBBI is having a conflict role. They are handling IBBI also, insolvency also, and valuation also. So we expect this to happen in some point of time in future. IBBI controls RVOs and RVs. RVOs, we all are aware, which we are attending. Asset classes, we have 3 asset classes, SFA, plant and machinery, and land and building. Generally, CA, CS, ICW, and MBA can register only in SFA generally. But if somebody who has done a BSc and becomes CA or CS, he can also register in plant and machinery. There are 3 professionals currently who have registered in all 3 asset classes. A single professional is a land valuer, plant and machinery valuer, and SFA valuer. So I will say he has become an RVE entity in itself. So all 3 valuations are there with him. Who will value inventory? So, and why this asset class is important? This asset class will become very important whenever you are doing IBC cases. So in solvency, whenever you do assignments, asset classes become important. So my query is, who will value inventory? What do you think? Which asset class should value inventory?
Finance.
You're saying SFA, financial asset class, SFA. Okay. What if you are doing a valuation of a real estate company and the inventories of land and building only, inventories of flats? So I'm giving an example in case, unless it's technical in nature. So what happens? I would like to do more work or I would like to do less work. I'm talking about psychologically. A professional would like to do more work or less work given a same quantum of fee. So this debate was going a lot in IBBI, that inventory should be done by which class. So what happens? All the 3 values start fighting among each other, and they say inventory belongs to plant and machinery category because it is a movable. Because plant and machinery value are movable assets. Immovable assets, they say, go land and building. So SFA should be only which these 2 classes cannot do. So question went to IBBI, and IBBI says we cannot give an order that which asset class should value inventory. That is not in our role. What a valuer need to see, or what a IP need to see before allotting which asset class need to value. See first what is the nature of inventory and which asset class is the most nearest to that nature. So if it's a land and building real estate company, a land and building fixes well. If it is a heavy earth moving machinery company having inventory, plant and machinery fits well. SFA becomes a residual category wherever you have no asset class falling in any of the 2 classes, all falls to SFA. In case of, for example, if you are doing a valuation of IBC valuation of jewelry company, in that case there will be a gold and diamonds. So can we do it? SFA can do valuation of diamonds and gold. So it has to go under SFA. Do we have the capability? So I always, on a lighter note, I always say, at least male SFA valuers may not have the capability to value gold and diamond. Female SFA valuers may still have the ability, but still, for sure, at least I know I cannot have a ability to value gold and diamond. So in that case, you need to have mandatory third-party assurance. You need to appoint someone who has an experience in that. So for example, when we got this assignment in Delhi, we appointed somebody from income tax, wealth tax act registered gold valuer. Now suppose you got such assignment, you hired a gold valuer, and the gold valuer give a you cannot take any assistance of any jeweler. That will not help you, Rohit ji. For example, suppose I know somebody, let's say my client is a jeweler also, let's say. So if I take a jeweler and say, you also do the valuation, so I don't want to hire a jewelry valuer. But if I take an example of jeweler, it will not fit you into the court of law. And I'll come to that why it will not fit. Suppose there is you have taken a value, you have taken a support of registered jewelry valuer from income tax department, and the report he gave you was wrong. You did not notice, because how do you come to know that what is the value he's giving, right or wrong? But once you have included that value in your report, can you give a disclaimer that I am not responsible for this value given by given by gold valuer, because that is not my area. So excluding this value, everything I give true, and I'll say it is a fair value. So my query, I have two queries. Can I give a disclaimer on the part of report which I don't know? Second, so first you need to conclude you can give or no. So answer is you cannot give a disclaimer. You can just disclose, and you need to disclose that I relied on this report on this dated, and this is a independent. You need to give a credential of that valuer you appointed also. Now, having said that, a mistake has happened in the report, and IBBI or government found the mistake. Who will be responsible? The registered valuer who has given the final report, that is me, or me and the valuer jointly, or only the gold valuer will be responsible? I'm not responsible at all. So the prime liability will be of RV along with that valuer. RV cannot be absolved from his liability by saying, I don't know this valuation. Now, before 2017, RV's values could have been always escaped before 2017. Now, post 2017, when the rules came in, mandatory, it becomes RV's responsibilities. It is mandatory. We have 14 RVOs. If you see the composition of the RVOs, till 2018, we had only 11 RVOs. No RVO was formed in 2019. Surprisingly, in 2020, in the lockdown, and if all these three RVOs got licensed in the lockdown period itself, between April and May. So it was a very surprising fact that world was lockdown and IBBI was actually working. So IBBI was working a lot in these lockdown period. So now we got 14 RVOs. You all RVOs have same standing. You all can, anybody can move from any RVO to any RVO. It is freely allowed. I can do trainings from any RVO. Let's say if I have become a member of All India Values Foundation, I can attend any programs and vice versa. So an exam simple question comes: to form an RVO, what entity should be there? Earlier, in first draft of the rules, it has to be, it can be charitable trust, NGOs, cooperative societies, or any other companies can, any non-profit organization can make a RVO. But now it got amended, and as of now, only Section 8 company can have a RVO status. Majority is directed should be in majority. Question comes on basics. What are committees which are mandatory? So any idea what are mandatory committees? This all will be in the rules. Any committees, any 4 committees you can mention which are mandatory committees as per valuation rules. Anything you can think of, any committee's name. So in exam, they either ask a question which is not a mandatory committee out of 4, or they will ask a question which is a mandatory committee out of 4. So we need to be aware of the committees. Any thought you have? Anything you can name some committees? Whatever you think, it is covered. Okay, so committees that you all are covered, that's fine. So in exam, just remember what are the mandatory committees and what are the optional committees. 50 hours training, you are no. Rohit ji, I am asking which are the committees. So that is 17 members you are talking, that is composition of committee which supposed to give, it is a central government committee, the 17 members you are talking, that is rule 19 is for a committee which is made to give a advice on standards, valuation standards. So they have a 17 members. This committee is of government. The 4 committees which I am asking is the committees which are part of RVOs. So suppose like the AIOVF RVO which we are talking. So they have 4 committees, and which is mandatory as per IBBA valuation rules that each need to have. So anyone can think of 4 committees. I'll just cover quickly. Okay. And more 4 more, any more you can consider? Anybody else can think of? So there are 4 committees. One, which is very simple. One is membership committee. And just if you can note down, else mind one important point. The valuation rules, the PDF 2017, you need to just read once, because very basic questions come from there. So that is mandatory. But I'm sure during the 7 days, it will be covered in bits and pieces by everyone. Even if it is not covered, you will have to take the onus. So first committee is membership committee. So which every RVO need to have a membership committee. Second committee, which is monitoring committee. That committee will monitor the assignments, monitor the training of the members, monitor the how are they updated on standards. So one is membership, who will look after all, how the forms are filled, whether the fees has been collected and all. Second would be monitoring committee. Third would be grievance redressal committee. So there is a third committee called grievance redressal committee, and it has to have minimum 3 members. So as per rules, they have not mentioned how many members need to be in membership and monitoring, but in grievance redressal, it has to be mandatory 3 members. Fourth committee is called disciplinary committee. So fourth committee is a disciplinary committee, and in that committee, mandatory 1 member will be from IBBI, mandatory. Okay, so these are fourth committee, and there is just one more, fifth committee, which is an optional committee. So the fifth optional committee is known as advisory committee, but that is not mandatory, that is optional. So once you go to the rules in model code of conduct bylaws of RVOs, you will find these 5 committees. So in exam they will ask which is optional committee. So optional committee would be advisory committee. These are mentioned in the code. After that you can make any committees. Chairman of all committees has to be mandatory independent director, mandatory, compulsory. You cannot have any related party. Let's say for example ICI or ICSA has a board, they cannot make their company secretary as a head of RVO. So any RVO as a member, they will do the course of 50 hours. You need to clear the exam. After clearing the exam, once you clear MCQ, you need to register with IBBI. After IBBI gives you a membership certificate, you need to do 1-day training. That 1-day training is known as certificate of practice training. So it will be just like taking a membership of CA and taking a certificate of practice. So once that 1-day training compulsory, you finishes that. After that, you will be eligible to sign. Now we all need valuations in different parts. If I'm doing any transaction, you're doing any M&A, you need a valuation. Be it into any law, be it into formal or informal requirement. So if somebody is investing funds, so there may not be any regulation that you need to get a valuation done, but the board would like to know that how should we invest? What is the value we are investing? If you're doing any fundraising, any sale of business, you need a valuation. Regulatory, all laws are generally talking about valuation. Companies Act, Income Tax, SEBI, all RBI, IBC, RBI includes FEMA, and nowadays in certain in court litigations also, at times of divorce settlement, the court is asking the registered valuer to value the land and building to decide the alimony amount. So this is also the way people are taking values into the court for certain services. And if anybody of you are dealing with India's clients or have a consultant or is having a listing a client, so generally in India, almost for all sections you need a fair value. So you need a registered valuer certificate. There is a dispute going on between the fraternity and the consultants and the clients. Should I need to have a mandatory valuation by a registered valuer in India? Because what happens in India, what is the problem here? Suppose you have a Index company which has an investment in unquoted shares. So if you are having investment in unquoted shares, For compliance purpose, every year end you need to get a fair valuation done. If you tell a client that, sir, I need to get this investment into fair value and I will charge X amount of fees, then client resists. Client says, why should I pay for just a compliance purpose and just for a financial reporting purpose? I'm not I'm not trying to sell it. So just take the book value of the company, the investee company, and close the valuation. This is a dispute always happens. What we have seen in last 2 years, wherever the auditors are big firms, big 10 firms auditors, they mandatorily insist client to get a fair value certificate from any RV. So that is a good opportunity for professionals, but a lot of clients are not accepting. So it depends on client to client. It has been asked to IBBI to give a clarification on this. We expect very soon, once they issue a formal clarification, it will help a lot of us. And it is said that it is better to be roughly right than precisely wrong. So valuation may not be 100% correct, but valuation always gives you a benchmark. The real transaction does not happen based on your valuations, the actual market transaction. So if you have a practical experience, you'll be sure that whatever valuation you give report, that is for compliance purpose. Client may have a different mindset. Now, after 2017, when the valuation rules came, a lot of confusion came into the market. And what is the biggest confusion? The biggest confusion came into the market was, now for a company, suppose there is a private limited company and you want to issue the shares at premium. Now, how many valuation certificates are required as per your understanding, and under which act? If anybody can give some light on it. Suppose you are a private limited company. Let's say last 10 years you have been running a private limited company. Now you want to issue shares at a premium with a discounted cash flow approach. So you want to have future projections and your value is coming very good value. So face value 10, fair value 90. Now and you're issuing to third party, you're not issuing to existing shareholders, third party, new shareholders are coming into the company. So how many valuations are required according to you? Any thoughts? What do you think? So I need, in Companies Act, I need mandatory in section 62(1)(c). So we need one valuation report under Companies Act from registered valuer. That is one report. What about second report? Do we have any other report in any other law? Is any other act is there where I also need a report? Do I need something in Income Tax Act? Yes, no. So in Income Tax Act, who will give the report? Who can give the report in Income Tax Act? So Ashwinji, under sections 56, who? Merchant banker. So in Income Tax Act, if I'm issuing shares at a premium with a discounted cash flow method, then only merchant banker can give, then CA cannot give. Now understand, and in FEMA it will be chartered accountant or merchant banker, fine. Now understand the plight of a client. Now what is the problem of the company? The director of the company says, I'm just doing one transaction, issuing shares to Sumit at fair value. Now for this, you are asking me to get two certificates, one from a registered valuer in the Companies Act and one from a merchant banker. If you are a client, would you like to pay twice for a same report? Now what will happen in case of income tax, Rohitji? In case of income tax RV and CA will not work out. So then what will happen? So in income tax, the client always cribs. Client says, why should I pay for two reports? One should I give to registered valuer in Companies Act, and one I need to give a merchant banker. Now, assumingly, client is willing to pay also. Assumingly, client is saying, okay, law hai to hai, nobody can do with the law. So let me pay merchant banker also, let me pay RV also. Right? Will the two reports have the same value or different value? Generally, I'm asking generally. We are not talking how we'll make it. Generally, we will have the same. They will give a same value or different value. Generally, they will give different value. Now, put yourself into the client shoes. would you like two different values, or will you say नहीं नहीं मुझे तो एक ही value चाहिए, बोले एक ही valuation हो रहा है, एक ही transaction हो रहा है, why should I get a two value? Companies Act के लिए दूसरा, income tax के लिए दूसरा. So practically yes, there will be two values. Practically, theoretically it should be there, but the reality is client does not like this kind of two different values. So what does client demands in such, and I'm giving you practically what happens practically. In such kind of cases, client will go to any RV and say, I'm giving you this assignment, you take this assignment, but you need to also ensure that you will get a merchant banker certificate also along with the services, so that your both rate will be nearby same here and there. It can be 1 or 2 rupees up and there. That is what practical happens, because client does, because the problem with this practice is there are so many different laws and client does not want to have entangle into law, because income tax department tomorrow may jump on client and say, in companies act you have issued at this amount and income tax it is this amount, the difference I will charge as again, because department can think of any such thought process. So that is the reason practically client faces a lot of trouble, and it actually caused a lot of trouble in last 1 year. Now as of now, again the situation is, as of now today we talked, I needed two certificates, but it may happen very soon we all will get only one certificate. I will cover that slide also in 5-10 minutes when that will happen. But when that will happen, then it will be the real value to the professional world. Rules, I'm sure you have been covered, so I will not touch base rules. I will just take 2-3 points which is important. Now from 1st February 2019, any report which will go into Companies Act has to be registered value only. It was mandatory from 2018 but got extended to 6 months because there were no values at the time in India. Section 247 mandatory, you need to read. In exam they ask basic questions. This I'm sure you all would have done and covered. Should have been covered. It was covered. They ask such a basic questions, and the answer, I'm sure everybody of you must be knowing this answer, and nobody can go wrong on this answer. Quickly answer anybody, so nobody can go wrong on this answer, and you cannot go and you should not go wrong, because this is a very simple questions they ask in exam. And this is the only section in Companies Act where audit committee has more power than the board. Normally audit committee recommends and the board approves. In this case, audit committee directly appoints. They ask very simple questions, yet confusing. Under which chapter number section 247 comes? So we are not supposed to learn chapters, but you know, there are so many chapters in Companies Act. Are we supposed to learn? But for exam purpose, they ask such a basic questions, because we need to understand in MCQ they have a very limited scope. So they are asking all simple yet tedious questions. So it is chapter 17. How cannot you associate it? 3 years you cannot be associated, and non-compliance penalties. Just remember, non-compliance penalties mandatory. Once you read section 247, you'll be sure you'll be able to clear section 247 very well. So I'll skip section 247. Now comes, what do we understand by valuation? So there is no definition given in any of the acts. Every act has made its own definition. Some standard has made its own definition. But generally, what is the definition which is a common parlance? It means valuation is the process of determining the economic worth of an asset or liability under certain assumptions and limiting conditions, and subject to data available for the valuation date. Now, suppose you are a valuer and you did a valuation yesterday. I did a valuation yesterday of a land and building and issued the report. Today morning, the entire building went into a fire, or it got damaged badly, making it realizable value almost nil. Is it a responsibility of a valuer to issue an addendum to the report? Yes, no, maybe. What do you think? Anybody think addendum needs to be there? So Nikharji thinks addendum should be there. Nikharji, any idea why you think addendum should be there?
जिस दिन हम ऑडिट वैल्यूएशन रिपोर्ट इशू कर रहे हैं उस दिन तो वो वैल्यू एग्जैक्ट ही दे रहे हैं. मतलब वैल्यूएशन हम करके आ गए, लेकिन जिस दिन वैल्यूएशन रिपोर्ट दे रहे हैं,
नहीं, रिपोर्ट मैंने कल दे दी थी,
लेकिन
रिपोर्ट मैंने कल दे दी थी, रिपोर्ट मैंने कल दे दी
अच्छा
थी,
रिपोर्ट, ओके,
आज की
देन
रिपोर्ट कल
माय
दे
आंसर
चुका।
विल बी नो. Okay, then my answer will be no.
So what does the standard says itself? Standard says in the international valuation standard, they say that your responsibility till the and valuation is subject to a specific point of time. So if my valuation report is 20th August, anything happens on 21st August, I am least bothered. Standard gives one caveat here, but if there were certain things which you overlooked yesterday, then it becomes your responsibility. So there are certain parameters I would not have witnessed, I would not have visited the site place, the building would have been destroyed earlier. I should have seen the condition. If there are no conditions, breaches, then there is no responsibility. Now, before we understand this, is valuation a fact or it's an opinion? The value, fair value you give, is it a fact or opinion? The value, the fair value report will give. So it can never be a fact, it's opinion. And why it is opinion and how do we draw this conclusion? Yes, it is opinion. And see the interesting part. So world over, we follow international valuation standards. So IVS, they are short form known as. They are issued by IVSC Council, International Valuation Standard Council. So this council comprises of 150 countries plus members. It's a non-profit organization who works mainly on valuation standards only. Till 2020, this value word was not defined in any of the standards. They were just discussing what should be the value, but the definition did not came. Now in 2020, the latest standard which just got updated on 1st of February 2020, the word value was defined in the standard, which says value refers to the judgment of value of estimated amount. So estimated itself is an opinion consistent with one of the values, basis of value set out in 104. I'll cover what is base of value, but just to give a background, so it is just a judgment what a value realizes. So valuer thinks it is an estimated amount. So no way you can say valuer has confirmed this amount. It is an opinion. It is a difference just like between certificate and audit report. Now then what is valuation? So they define what is value. They define what is the valuation. So valuation, they have been defined. It was also not defined so many years back, just got updated in 2020, the definition. So they say valuation refers to the act or process of determining an estimate of value of asset or liability by applying IVS. So if I'm following IVS standards, valuation will be, whenever I'm doing any valuation, if I'm doing as per IVS standard, it will be valuation. They call it, it is an act or process. So what is difference between act and process? Simple difference. Suppose there is a listed company, and if I need to do a valuation of a listed company, somebody says, okay, give me a valuation of a listed company. For we are talking of India's purpose. So will I do any work on that number or directly take the Sensex stock exchange price? And it is a fairly quoted, full, frequently traded. So will I do anything jugglery, or I will just take whatever is the closing price as on 31st March coming? So I will take stock exchange price. So here I'm not doing any process, it's just an act. So there is act is you take the price and put it into your report. But if it is an unquoted stock, or if it is a listed, but it is a infrequently traded stock. So in a stock exchange, there is a concept in valuation. Is it a frequently traded or infrequently traded? Can anybody let me know what is the difference between frequently traded and infrequently traded? What is the difference between these two? What is frequently and infrequently traded? And this is as per SEBI. So SEBI has defined
हेलो
a definition. Yes,
हेलो
sir. Yes, sir.
प्रज्ञा से बात हो पाएगी क्या?
हो जाएगी बात तो.
राजेश जी, मैं गौरव बोल रहा हूँ. गौरव महेश्वरी चार्टर्ड अकाउंटेंट.
महेश्वरी जी आपका म्यूट पे नहीं है.
बढ़िया जी, बढ़िया.
गौरव महेश्वरी जी.
आलोक जी आ गए नहीं आए अभी? एक्चुअली नीलांचल का मेरे को प्रज्ञा ने एक डाटा शेयर किया हुआ है, ठीक है। अब मैं उसे खोलने की कोशिश कर रहा हूँ।
आई एम नॉट श्योर
नीलांचल का इस बीच में कौन देख रहा था,
गौरव जी
तो वो
कमेंटमेंट
डाटा ओपन नहीं हो रहा।
I'm not sure Gaurav ji is a part of batch or I'm not too sure.
आप
Like participant.
ये मेरे को प्रज्ञा ने मेल
Can
भेजी हुई
somebody
है
maybe
18-19 की टैली
let me see if I have a
6
right to
फरवरी।
mute Gaurav ji.
हाँ
Let me check.
ठीक है, तो एक बार मुझे आप डाटा
Sir,
दोबारा भेज पाएंगे?
host can unmute the mic of Mr.
Let me.
whatever.
Yeah, let
अगर
me
ऐसा
try
हो
to.
तो आप मुझे डाटा दोबारा भेज दीजिए।
सर ये तो आपने आपका माइक स्विच ऑफ कर लिया, म्यूट कर लिया। आप उनका माइक भी म्यूट कर सकते हैं।
I think now it's clear. Yeah. So coming back to the point, what is the difference between frequently traded and infrequently traded as per SEBI? Anybody can mention? If we talk as per SEBI, what is frequent or what is infrequent? Whatever you can think of. तो सेबी ने डेफिनेशन बनाया होगा तो कुछ आपके हिसाब से कुछ आइडिया है आपको, कुछ भी बेसिक आइडिया, whatever you can think of. And this kind of frequent and infrequent definition is important for you for two reasons. One, for exam purpose. You need to, in exam, a question comes on what is frequent, what is non-frequent. Second, in your practical scenario, you will get a lot of valuations for such kind of stocks. So there may be certain stocks which are listed but not frequently traded. So anybody need to give me some answer, right or wrong? I'm not bothered. Just give me some answer. और यहाँ हम गलत आंसर देंगे
में ट्रेडिंग ना
कितना कितना नहीं हो, नहीं बराबर है, योर हाफ आंसर इज करेक्ट। लास्ट 12 मंथ्स में कितना ट्रेडिंग, कितना कम ट्रेडिंग होना चाहिए? ट्रेडिंग तो होना चाहिए लास्ट 12 मंथ्स में, मतलब
जो उसका टोटल मार्केट वैल्यू, टोटल शेयर जो उसका 5% से कम अगर हुआ है ट्रेडिंग,
उसका 10% से कम हुआ है तो एब्सोल्युटली करेक्ट। 5 की जगह बस 10% डिफरेंस है। अगर मेरी कंपनी का जितना नंबर ऑफ शेयर्स हैं उसका, इफ द ट्रांजैक्शन इज लेस देन 10% ऑफ द वॉल्यूम, total volume during the last 12 months, then it is considered as a infrequent traded company. So infrequent traded agar company hoti hai, तो then I cannot directly take a stock exchange price because then it is a fudge price. Suppose last एक साल तक कोई transaction हुआ नहीं और मैंने 31st मार्च को just to make my book strong एक stock खरीद लिया at 10 रुपए की वैल्यू थी, मैंने 90 रुपीज का बिड लगा दिया। I'm giving a hypothetical number. So stock exchange will show market price is 90 rupees, which is not fair. So इसीलिए whenever there is a unquoted price or unlisted company, then you follow a process. So that is valuation. Is valuation art or science? This debate goes long way. What do you consider valuation as an art or science? When we were doing commerce, this question always used to come. Commerce is an art or science, because commerce students fall in between, neither an art or nor science. So my professor used to always say that if you are if in commerce, if your trial balance tallies automatically, then it is science. But if you tally your trial balance manually, then it is an art. So that's the way it falls between both of them. But Professor Damodaran and those who are into valuation field should be aware of Professor Damodaran, and if you're not aware, should know Mr. Damodaran. So his full name is Professor Ashwath Damodaran, based in New York. He's known as a dean of valuation, probably one of the highly acclaimed faculty globally on valuation. He teaches in New York University, mainly on valuations. He says it is neither a science nor an art. It is a skill, that is a craft. That is, the more you do, the once you get better at it. And how true it is. I still remember what the valuation which I did first valuation. If I see what I did and what the report I issued, even after becoming RV, and today what I do, it's a huge difference. So we all will learn over the process. We do make mistakes and we learn out of those mistakes, because valuation is not 2 plus 2 4. Valuation changes with each entity in each transaction. IBBA itself accepts, and IBBA in their committee of experts note, they have written we understand value is an ambiguous concept because it may happen one asset may get a different value depending on the different purpose and depending on different valuers. So if there is a building on, let's say if you are in Delhi, there's a building in Connaught Place, one valuer may give a different value, another value may give a different value depending on what purpose he is valuing. It all changes depending on purpose and concepts. So there's a classic example, funny cartoon published in a newspaper that 12 analysts reviewed our gave it valuation reports, and 12 valuation reports are different. All they had common is was $500 hour per fee. So the fees was common, rest everything was different. And this actually happens all the way. You will find people who are valuing any loss making company at a very high price and high making profit making company at a low price. I'll give you some examples shortly. Before we understand the fine concept, can anybody tell me what is price equals to value? Yes, no, maybe. Okay, let me ask another question. Is value equals to price? What about other members if they can also ask? What from the future? Okay. So obviously if your answer to first question was no, then your answer to second question has to be also no. I just changed from LHS to RHS, so there is nothing technical here. Now as a consultant, and tell me based on your practical experiences, whenever a client comes to you ask for a valuation, does he tell you to do a fair value, or he will say, and this is the expected price which we are targeting to deal with? Yes, no, maybe. Does the client comes with a pre-price in his mind, or he says, no, no, I need a fair value? Generally, I'm talking practically what you do or what happens practically. Is the client looking for a fair value, or client has already decided a price and then he's coming to you? Majority of the cases you will find and my past experience from last 3 years, majority client always comes with a pre-decided price in his mind. He knows what he wants, and that is always there. That is always there. As a valuer, what is your challenge now? As a valuer, your biggest challenge would be bridge the gap between his expected value, his expected price, and your fair value. Because client is not controlled with any standard, but we are controlled with the standards, and we are controlled with RVOs. So if my standard says I can use only this method, I can go only up to this extent, I cannot cross that boundary. But for client, there is no boundary, and client will always push you to go for unnecessary prices, and especially in case of startups. And if and those who are based in Bangalore, I'm sure they're fully aware of how kind of valuation happens for startup. There is no projection. Company just opened a day yesterday, and he asked a price of 50,000 rupees premium, and I was surprised. I said, how can you get it? Well, the Ola, how did Ola get it? How did Uber get it? When I said, don't compare yourself with Ola, Uber. They say, I will also become Uber one day. Then you will come to me and say, yes, you were right. I said, I will love to see that day. So every client would like to have price what he wants. But my problem and your problem would be in future, you need to ensure that the value you derive should be within the standards framework. If you can do that, nothing can go wrong. I'm not saying a newly startup company, last 6 months company, cannot be valued at 50,000 rupees per share. It can be. I'm not saying that it cannot be, but you need to have base for that. Warren Buffett smartly says, price is what you pay and value is what you get. This is the actual difference. But if you go into more detail and understand few basic things in exam, question may comes on this, and few understand. Price is always precise and it is fixed because you have actually incurred it. So if I want to buy an iPhone, I bought the iPhone, so that is a price. So the quantum is fixed. There is no hey, yes or no. There is no subjectivity involved because you have actually spent that money. So that is always price. So price is always an entry price of a transaction. So again, understand the line. Price is always the entry price of a transaction, whereas fair value is a exit price. Suppose I bought a building at, let's say, 1 crore rupees. So that would be my price. I bought the building at 1 crore rupees. But I have a back-to-back a buyer who is willing to buy that building at 5 crore rupees. So for me, 5 crore will be the fair value because that is the exit price I can always get. I cannot say 1 crore is my fair value because that's what I've incurred. No, that is you incurred, that is your entry price. But what precisely are you able to exit? That is at 5 crore. So that becomes your fair value. So this is theory concepts. I'll discuss the concept of value. But there is another gentleman who says valuation is what people are willing to pay. So that's the point I discussed of 50,000 rupees. If there is one buyer who is willing to buy a stock at 50,000 rupees, what problem you have? You could buy, let him buy because it's an investor money anyways. So if there is a loss making company, investor wants to buy, you should not have a problem. I'll discuss few concepts shortly, and this I'm sure you all are aware, and these are all public data available. We all are aware of Flipkart. Most of you people would be buying and selling. See the valuation of Flipkart jumping from May to July, 2.6 to 7.1 billion. And then from December 11.5 to July 15.5. July 16, they just went into half. Why? A news came into the market that the promoters fought among each other. The value almost went half. In August, next month, now see the beauty. July 8.8, August next month, almost 50% up. Why? A news came that some investor is coming from China. The value went very high. November, value almost went half. Any idea what would have happened in November 16? The value almost went into half. Any idea you can think of if your memory power is strong? What happened in November 16? The value almost went half. Someone need to think and recall. Something happened in November 16 which made the value almost went down. I'm not sure you are able to listen me or not. Anything happened in November 16 why the value would have gone down? Someone would have left the company. Demonetization. नोटबंदी मित्रों की आवाज आई और सारी IT companies and सारी tech companies went into half. And why demonetization damaged these companies' valuation? Because these all companies were selling on cash to delivery model, cash on delivery. मैं आप इंटरनेट पे बुक करिए, घर पे आएगा तब आप कैश दीजिएगा. उस टाइम जब लोगों के पास पैसे ही नहीं थे सामान खरीदने के, अनाज लाने के, so why somebody would buy on Flipkart? So November nobody went for buying, and this became a major issue. So the value almost went half. And see the other side of it. Somebody's loss, somebody's gain. Paytm came. Paytm valuation 2.3 billion. In June, started in June, September 4.8 billion. Again, due to demonetization, their valuation doubled. Because loss of Flipkart or loss of IT companies, cash made a favorable gain for Paytm because people are using money, e-wallets, and they made a huge valuation of 10 billion. If you see 2017 Flipkart balance sheet, they had a loss of 245 crores, reported loss for the period. And their valuation came 7.6 billion. That is the valuation they reached in 2017. Now 2018, their loss was 2063 crore for the year. We are not talking of a consolidated loss. It is the P&L loss booked in balance sheet 2063 for March ending 2018. Any idea how much valuation it would have been? How much valuation would have come on that 2018 approximately? Your numbers. Any number you think the valuation could have been? I know nobody can recall, but just a vague number
20,
according to your
20 billion.
20 billion. Anybody is saying into going, we all are saying going up. Anybody saying going down? Or we all think it should go up? Loss बढ़ा है तो valuation बढ़ेगा या loss up? So the value actually went up to $20 billion. And this became a huge issue. Similar happened with Paytm. Their losses was doubling every year. and their valuation was also increasing every year. Their valuation went to $16 billion. Despite the every year, the losses was almost doubling every year. Any idea why this was happening? Because when this was happening, one of the promoters of RPG Enterprises made a classic tweet on a Twitter. He mentions, and which is very interesting tweet. And this is a question my father always used to ask me also when I did a valuation course. That if I travel in Ola and stay in Oyo Hotel and pay through Paytm, I will increase the losses of all the three companies. Just a second, let me mute. So if I'm increasing the losses of all the three companies, then how come my valuation is going high? Anybody can explain this gentleman what is the problem and why the valuation is going high? This is the
This
general
will
theory,
depend on
general problem. बोलिए सर.
फ्यूचर मार्केट तो इनका बढ़ता जा रहा है, सब्सक्राइबर बढ़ते जा रहे हैं और इनका जो फ्यूचर है वो उसके बेस पे इनका वैल्यूएशन हो रहा है. दैट्स व्हाई वैल्यूएशन इज गोइंग टू इंक्रीज. Subscriber is the
So
main game.
do you think it is? Agree. Subscriber are increasing. I'm not startups हैं बराबर है. Fair enough. So their share is increasing. But do you think that is the only reason it is going up, or there is some other factor also? Is this the only factor? Because what is the problem with market share? As you rightly mentioned, market share. We all would have been traveling in Uber and Ola generally, right? और हम सब के मोबाइल में 99% लोगों के मोबाइल में दोनों एप्स होंगे. You would be having Ola also and Uber also. And when you are standing at airport and railway station and trying to book a cab at your home, we will see the most expensive one or the most cheapest and most earliest one. We'll look for the most cheapest cab and then we'll book accordingly, right? Generally. So having a high subscriber does not guarantee that business will short fall to you. 50% probability business may come to Ola, business may go to Uber. I'm just giving it a hypothetical example. Then the one reason is market share. What is the second reason where the value is going so high? For example, if you want to take a Paytm share now, unquoted share of Paytm, it will go into the gray market at 21,000 rupees. So what is the greed is, there is another interesting theory which is similar to greed. What they call that? So Professor Damodaran has given a very interesting theory concept, and they call this theory as bigger fool theory. What does this theory bigger fool theory means? It means that a fool buys a stock at a higher price from more than the intrinsic value, thinking that there will be another fool in the market who will buy it at a much higher price from me. And the problem in this chain becomes when you are the ultimate fool and when you got the last. So iski topi uske sir. So when you got the last, because why we buy unquoted stock or a lost stock? Because we think in future it will grow high, then I will exit. Now tell me honestly, do you think in India Paytm, Ola or Flipkart can have their IPO in next 3 years? Can you think they can have an IPO in next 3 years? Now the value has gone so half. I checked last year, it was 21,000, 12,000. So shows how much the value has gone. How? Now you tell me, and I was about to actually buy the Paytm share. Actually, I was about to buy the Paytm share at 21,000 rupees. But the condition the broker say, you need to buy minimum 10 shares lot. Then only I will give you. So I said it will be big amount. So because normally they will not give you simple single shares. Now, why people buy stocks? Because I think in future it will grow and I will exit, right? So exit is the strategy we all think. आपको लगता है ये स्टॉक्स कभी लिस्ट हो पाएंगे इंडिया में सेबी में? आपको लगता है? आई एम जस्ट आस्किंग. मैं नहीं कह रही नहीं होंगे या लॉस मेकिंग. आई एम जस्ट आस्किंग यू. My personal assumption is no, for a simple reason why they will not get list. Because to get list in SEBI, you need to have a 3 years profit track record. और जो मैंने आपको भी लॉसेस बताए, इतने बड़े बड़े लॉसेस हैं, एक साल में प्रॉफिट नहीं आ सकता. आई डोंट थिंक नेक्स्ट 5 years they can make that kind of money. But having said that, we buy in anticipation that कोई ना कोई तो मुझसे खरीदेगा, किसी को तो उसमें वैल्यू दिखेगी. Based on that, in the anticipation, number goes up. I am not saying startups cannot have a higher value. Just because there's a loss does not mean value is not there. Value is there. So Warren Buffett says managers and investors should understand that accounting numbers are only the beginning of valuation and not the end. The valuation starts from the accounting numbers and then the story follows. Now, I'm sure WhatsApp acquisition, everybody talks for ages. When WhatsApp was acquired, WhatsApp do not charge revenue. They don't have a revenue model. They don't do advertisement model. But still, at time, Facebook acquired at $32 per user. Now understand few basic concepts of value. When we talk of value, what do you mean by value? One of the interesting part is we talk a lot about fair value, but the word fair value is not defined under international valuation standards. So that is not there. Now the first definition is in exams they may ask the basic definitions. Just understand the basic definitions and see what is the difference here. So they say first word is market value. Market value is estimated amount for which asset and liability should exchange on a valuation date between a willing buyer and willing seller in an arm's length transaction after proper marketing and where the parties have acted knowledgeably, prudently, and without compulsion. That is a standard language, market value. Now, tell me, here we are saying willing buyer and willing seller. So it means, are the buyer and seller are identified? Do we know the buyer and seller, or we are talking in general? What is your view? If we understand the definition market value, because standard says there are various bases of value. So first value is defined as market value. So is it a general value or a specific value? When I say general value means, do we know the willing buyer and willing seller in this, or we are just talking in normal market scenario? What do you think? Just read, take it a minute, read and let me know. Quickly let me know. So it is a general value. Here seller and buyer are not identified. We are assuming in a normal market scenario where if any person buy and sell, then they will do an arm's length transaction, proper marketing, and parties acted reasonably and prudently. Now there is a concept of market rent. Now, what is market rent? Again, any rent which you can get estimated amount for a real estate property where you can lease it between a lessor and lessee. So in exam, they may ask, what is contract rent or market rent? So market rent is the actual estimated amount which ideally a lessor should take from lessee. This is ideal. What is contract rent then? Contract rent is the rent at which the actual transaction happens. Suppose the market rent, the normal scenario should be for one property, you should get a 1 lakh rupees rent per month. That is an ideal scenario. But now let's say due to COVID happens, or let's say there is a loss in a scenario, economy is going down. Though your market deserves the rent of 1 lakh, but the people do not have the capacity to pay. So people agree, the lessee agreed to pay you at 80,000 rupees. Then it becomes a contract rent. It is not a market rent. Market rent is what you should have got in a reasonable terms. So that is a market rent only for leases, because the standard is written for all assets. So that's why we have real estate also in between. Now understand this word equitable value. And in exam, when the question comes, remember few things in this. One, the most important thing, it is an estimated price for transfer of asset or liability between identified knowledgeable and willing parties. In case of market value, we do not have identified parties. So this is an identified party. Given the weightage, which value will be more stronger? If I say I want to have a fair value, which value will give me more stronger value? Market value or equitable value? If you can think, so there are two values, basis of value, equitable value and market value. Given the understanding, which will give me a strong value? Okay, I have a property with me, and I told an agent say, sir, market में बेचने जाओ तो आपको 10 लाख मिल जाएंगे. Agent has told me. Then I got a buyer at my home office and say, 9.5 lakh रुपए cash, I can take the deal close. which you think as a businessman will give me more comfort? एजेंट ने बोला देख लेंगे मार्केट में, या मेरे पास आइडेंटिफाइड पर्सन है, where I think the value will be more stronger to me. I'm not saying high or low, where I have more surety on the value. कहाँ पे मुझे surety मिल रही है? हाँ, this is then the equitable value, because the only reason why equitable value, why market value will not give me more surety, because in equitable value I have an identified buyer and seller. The parties are identified, and in exam such a basic questions they will ask and try to confuse you. So understand before you go for exams, and once you get a time, read the definitions thoroughly. These are from standards of valuation standards. You need to read and understand, because there's small difference. uh, Willing parties and identified parties, a huge difference. Willing is anybody is willing to buy, but that does not shows actual intent to buy, where in identified you actually freeze the parties. Now there is a term called investment value. What is investment value? It is the value of an asset to a particular owner for his individual investment or operational objectives. It is not for market specific. It is for only a particular owner. For example, if you have seen the movie Diwar, I'm not sure how many of you have seen the old movie Diwar, where Amitabh Bachchan goes to buy a building, and the seller says to Amitabh Bachchan that you don't know how to do business. You are paying me 10 lakh rupees for this building. Now the deal has been done. If you would have asked me, I could have given you 2-3 lakh discount more and would have sold you at a cheaper price. Now then the Amitabh Bachchan responds in that movie and says, Sir, you don't know how to do business. If you would have asked 10 lakh more also for the building, I would have bought it. Now the seller got confused. What is so special in the building that I could not see the value, and the buyer is able to see the value? And then Amitabh Bachchan tells his story. And when he was young, when the building was under construction, his mother made the building by putting bricks and all. So now investment value can never be from the perspective of seller. Investment value is always from the perspective of the buyer, or who will be the probable owner who will use it. So he may have any value which you may not know. So fair value is different from investment value. Now synergic value, this the name suggests. Without reading the slide, can somebody tell me what is the meaning of synergistic value? Don't read on the slide, but just quickly, what do you think can be understand what the word synergistic value?
Value increased by acquisition or merger.
So what it makes is synergy value is, suppose there is an entity A, company A. The company A may have a fair value of 100 rupees, let's say. But if this company A merges with company B, which is in the similar line of business, or which can have a synergy out of it, then the value may become 150. So in synergy, you see the synergy value is always where both the parties can have utilized. For example, when Uber was in cars industry, only on rentals, they were just driving cars. They started Uber Eats because they realized that whenever businessmen, whenever motorcycle riders are free, they can also capitalize the business of taking deliveries from restaurant and serve. So both the things can happen. So that's why they were trying to synergize it and try to get a value. So synergy value is not a single value. It is always has to be seen with the both the entities, and it is also known as a marriage value. So in exam, a question may come, which value is synonymous to marriage value? So marriage value is similar to synergistic value. Liquidation value, I'm sure we all are clear on liquidation. It means that, now understand, there are two things in liquidation value. One, liquidation means you are about to end, you want to sell. So that the value which I will realize on selling the assets, that is one. Now there are two scenarios in liquidation. One, where I have a voluntary liquidation, where I can close voluntary. Second, where I have a forced liquidation. So I need to close in a day or in a month time, where the liquidation is not happening as per my choice, compulsory liquidation by IBC or by court. So in that case, so there are two values maybe. One value where I am having a proper time to liquidate. Let's say, for example, Cream Bell announced a liquidation. If you remember the Cream Bell ice cream, they announced a liquidation in COVID period. They said now in next 6 months we will close our business because we don't think COVID will impact a lot and people will not eat ice creams and all. So we will close our business. So they have sufficient 6 months time. They will do a proper marketing, sell the company. But there are certain companies who have been asked. There have been certain companies who have been asked to close because of IBC. So liquidation value can be on a orderly transaction or can be on a forced transaction. Now, fair value, as I discussed, was not defined in. It is not defined in the international standards. Fair value is defined in IFRS 13. IFRS is globally accepted in more than 160 countries plus. IFRS 13 says fair value is the price will be received to sell an asset or liability in an orderly transaction between market participants at a measurement date. It is more or less similar to market value, more or less, because it also talks about market participants, willing buyer and willing seller. Similarly here, there is always a confusion that fair value and fair market value are same. It may look like a synonymous, but in technicality it is not same. OECD has defined a fair market value definition that fair market value is price a willing buyer would pay to a willing seller on an open market. So it can be any price. So there is a small difference between fair value and fair market value. Generally, for tax litigation purposes, this price is used fair market value for international transactions. Now it is a legal regulation. I will not take what sections you're required evaluation, that you can always go through whenever you time. This is for your practical professional, not for exam purpose. Just once you become professionals, that once you pass the exam, where you can derive a value in this kind of profession. In days, there are so many opportunities. I'll just take 5 to 10 more minutes extra, and apologies for the delay because delay was from my side. So in IBC, we discussed that we need to appoint 2 valuers. Now, suppose he appoint 2 valuers for each asset class, and one valuer is given a value 100 crores, and second valuer is given a value 300 crores. What should IP do then? And this kind of question comes in exam, very basics. What should IP do? This should be covered in the evening in a detailed length, but still, what do you think can be? Can I have an answer for this? So you will get a third valuation done. So rule says wherever there is a significant difference, appoint a third valuer. So we appointed a third valuer also, and the third valuer is given a value 400 crore rupees. Now what should be my fair value? First valuer has given 100, second valuer is given 300, fourth valuer is given, third valuer is given 400 value. What should be my fair value then for IBC purpose? Quickly, if you can mention. 300. The laws very clear. They say take the average of 2 closest value. So what are the 2 closest value? 400 and 300. That average 350 crore should be your fair value. So in exam they ask a simple questions on this. Just remember on this concept. It should be covered in the evening session today. Now as we discuss the point, mandatory it is in these 3 areas. Non-mandatory it is into others area. We expect very soon a new bill come. A bill has been already passed. Bill is under discussion. Draft values bill. When it comes into practice, it will have, they are saying in the bill preamble itself, cover all other laws into Values Act. So banking, income tax, SFA, FEMA, SEBI, Black Money Act, LLPs Act. Everywhere the valuation should be done by registered valuer only, or the valuer only under this act. Once this act passed, huge opportunity for professionals to take for. It will be a good game-changing scenario for all of us. Now, just few things to know quickly. What is valuation date? The valuation date will be the date on which you are valuing the asset or property or giving a fair value report. So if I'm doing a fair valuation of a company and the balance sheet is date 30th November. So 30th November would be the fair value with the valuation date on which I'm doing assignment. Valuation report date, the day you are issuing the report, it is there. Premise, what are the premises? Going concern or liquidation, I will let you know in a shortly. Just remember, those who are members of ICAI, whenever you become registered valuer, you need to generate UDIN mandatory. Even if you are issuing report as RV, ICAI has given a clarification that all chartered who are practicing as RV need to generate UDIN. Now, what is premise? A premise means what the assumption that when you are valuing an asset or liability, are you valuing it as a going concern or a liquidation? So whenever I'm doing a valuation, I need to decide, is it a going concern or a liquidation? I need to fix this. Without fixing this, your value will not be fine. Because if I'm saying it's a going concern, then I may take HABU, highest and best use method, or current use method. Else, if it is a liquidation, then I need to see, is it an orderly liquidation or a forced sale liquidation? So that will have a huge difference. When you are having in days class, that will be covered in detail, what is HABU and current use, and liquidation will be covered in IBC. What are the valuation approaches? Can anybody tell me quickly what are the valuation approaches quickly? I'll just take 5 more minutes maximum, and before 2 p.m. I'll close. But for that you need to respond quickly. Sorry,
Future revenue discounting method.
I am not able to get voice maybe.
Discounting method.
So that is a method, that is not approach. So there are 3 approaches to valuation: kal, aaj, kal, past, present, future. That means cost approach, market approach, and income approach. Whatever you have incurred in the past, that is your cost approach. Whatever is available in the nearby market, in your neighborhood, that is a market approach. And what you will earn in future, that is your income approach. Now these approaches will have various methods. So these three approaches are global approaches, and they have various methods. So in case of market, you have a method called market price, just like your stock exchange. Comparable companies. So if I am valuing Infosys, I will see the TCS or Wipro, which is a comparable company. I can do a valuation based on that. If there is no comparable company, then I can do a transaction. Suppose TCS bought a foreign company in Germany and Infosys is also willing to buy a foreign company in Germany. I will try to see what was the comparable transaction which Wipro did, so I can do a replica of that. I can get some ideas. Income approach, you can have a DCF method, which is the most preferred method used. If you are valuing intangibles, you can have a relief from royalty method. अगर आज मेरे पास कुछ asset है होता तो मैं कितनी royalty देने से बचता. With and without method, option pricing, these are all income approaches. Cost approach, if I replace the asset, then what will happen? If I reproduce the asset, then what will be the cost? This will be covered in next 7 days whenever you are working or will be taking sessions on different approaches. Like intangibles will cover all these approaches, and each other sections will cover different approaches. Valuation is fine, this rules fine. Standards, we are know that central government standard is fine. As of now, no standard has been made by central government, so we need to follow IBS. For your exam purpose, should you read ICAI standards also, ICAI RVO standards also, or you should read only IVS standards? Because we have 2 standards as of now, IVS and ICAI RVO standards. For your exam purpose, what should be done? दोनों पढ़ने चाहिए, नहीं पढ़ने चाहिए? Should I read both standards or one standard? I'm eating your lunch time, so you need to quickly respond. Just read only IVS for exam purpose. No need to read ICAI RVO for exam purpose, because in exam question will come only from IVS standards. So read IVS standards. I'll just take one last point and then wind up for today. Then I will meet in the next week. There are so many issues in valuation, so many issues. This is for practical purpose. Once you become valuers, we can have a discussion on this slide later. But the most important issue which I want to highlight is human error in punching data. This issue, we need to be very careful. I can have an excuse for all other issues, but just for human errors, I cannot have an issue. This is one of the report from one of the very big valuer in Mumbai, a very big valuers, one of the big firms. They made a very blunder, classic mistake in the valuation, and income tax department got this error, and it became a big issue. What was the error? Instead of subtracting debt, the formula put in minus, they added debt. So your fair value become very high and it become a big issue in the assessment. So we need to be very careful what we are punching in, because Excel will only give you what you are delivering. So I thank you all for your patient hearing, and I'm apologies for the technical glitch for half an hour we spoiled for the day. I hope your lunch time should not be squeezed. So we'll take a quick break, and I'll be joining in next maybe day after tomorrow or another sessions when it is lined up. So if you have anything left out, we can discuss in that next session, because today I think if you have any questions to us, we can ask now. I have no issues. But since your lunch time is getting shortened, so and there are some members who need to cook also, so for them it will be too tight to finish in 30 minutes. If you have any questions, then you can ask, else we can announce for a break. Vijayji, you are there? I think he's away. If any of the participants has any question, feel free to ask, else we can break for the day, and then you can resume at 2:30 or 2:40 at least for the second session.
What is OECD in fair value you mentioned?
That is Organization for Economic and Cooperation Development.
Part
There
of
is
the
an
subject?
organization.
Part
No,
of-
not part of the subject. Not part of the subject. It is just to give you an idea that from where these definitions are deriving, because none of the standards have, like, if I'll give an example of fair value. So this ideally should have been there in a IVA standards, but it is not there. So when we do a valuation in practical scenario, we need to see which standard or which act we are working. So if you are working for an international client and having a tax treaty, you need to follow OECD definition. If you are working for India and for a listed company, you need to follow fair value definition of as per IFRS or Ind AS. And if you're doing any transaction of FEMA, then you need to follow FEMA RBI regulation. So RBI guidance I have not touched, because in RBI they have given a different this PPT will be there. I'm not sure about other material which you're looking for. All PPTs which I have shared and all other faculties which will share, PPTs you will always get. All other materials you'll get. I think material is sufficient available. Material should not be an issue. The issue should be how quickly you can grasp and read that material. That is the issue. So maybe I will have another session where I'll discuss on how to prepare for exams and what are the common pitfalls we do in exams just to avoid that. So that session will take you. So rest assured that faculties will do a proper hand holding for you till the time you clear the exam, and that we all should look for that. So if that is,
today we have covered 4 marks weightage overview evaluation.
yes sir.
Thank you.